Hi friends, if your portfolio nowadays is fluctuating a lot, one day it is gone up by 2%, 3%, and the other day it has come down crashing by let's say 3% or 4%, do not worry because this is very normal during the elections period. Have a look at my screen and you will see the Nifty VIX, which is an index of volatility, has shown that pre-election. So you see the yellow bars here in 2009, 2014, 2019. Prior to elections, the volatility in the market goes very, very high. And after the elections are over, then the volatility calms down because the VIX, that is measure of the volatility in Indian market, comes down, as you can see that in the chart here. Point is very, very simple. If you're sitting on losses, do not worry. It is not the time to panic and lose your mind and go and sell all your portfolio. No, you don't need to do any of that. But more importantly, there are three questions that everybody is trying to find an answer for. Number one, will markets rally if BJP or NDA-led government comes into power again third time? That's point number one. Point number two is what happens if BJP loses or do not come with the majority? Will the markets crash? And thirdly, what should be our portfolio strategy during this elections uncertainty? How can we make our portfolio as a winning portfolio? So in this video, I will give you my views. My views may not be necessarily the right views, but I would love to know your views as well in this video. So let's go through and understand a lot about elections impact on the stock market and what is likely to play out in the next 4 to 6 weeks. Let me take you back to 2014 Lok Sabha elections held between 7th of April and 12th of May. Results were announced on 16th of May. We all know the outcome of that. Narendra Modi led NDA government won massively and UPA led government, which was the ruling party for the last 2 consecutive terms, lost the elections massively. But more importantly, if you look at the market, we will find very, very interesting outcomes of that elections. Have a look at my screen and you will see Nifty 50 index, and I have used the weekly candles here. From 3rd of March up until 12th of May, I have considered that period, and you will see that markets rallied by almost 15%. You will see this pattern across almost all elections where the markets will rally before the election results are announced. So here the markets rallied by close to 15%. What happens after the results were announced? So 12th May here, results came on 16th of May, and have a look at my screen. Then after 16th of May, there was another rally and Nifty went up by close to 10 to 11%. Now, did elections outcome drive this rally? Well, maybe, may not be. But more importantly, what was the valuations at that time? Let me show you some other interesting facts here. Have a look at my screen and you will see Nifty PE ratio at that time. May 2014, Nifty PE was at around 19.8. So whenever Nifty PE is trading at lower than 20, in my mind, what I think is that Nifty is undervalued. While if Nifty PE is ranging between 20 to 25, then I would say the market is fairly valued. And anything beyond 25 when it comes to Nifty PE, then the markets are generally considered undervalued. In case of May 2014, Nifty was at around 20. Therefore, the markets were undervalued. And BJP coming with the majority into the power led to this rally because anyways Nifty was undervalued. Also, let me now introduce you another parameter which is called Warren Buffett indicator for valuation. What this simply says is what is the total market capitalization of a stock market divided by the total GDP. For example, what you see here in my screen is right now US market capitalization is around $55 trillion while the GDP is at around $28 trillion. So it comes out to be 199%, which is massively overvalued. Now, if I show you the data for 2014, Indian markets at that time, if I calculate this ratio, was coming around 67%, and anything between 64% and 82% is mostly considered as undervalued. So we have looked at the Nifty PE ratio and we have also looked at the Warren Buffett indicator. Both of them suggest that at that time Indian market was undervalued, and that is the reason why the markets were rallying after the elections. If you like this sort of in-depth analysis, what you can do is consider subscribing to my YouTube member community. I post in-depth analysis of stocks, mutual funds and various assets that may help you make investing decisions. Let me now speak about 2019 Lok Sabha elections, which were held between 11th of April and 19th of May, and the results were announced on 23rd of May. This time around, Narendra Modi led government won even with a better margin and UPA lost even miserably. And if we now look at the Nifty 50 weekly candles, exactly the same time frame, you will see here from March to May, there was a rally of about 8%. So that is very consistent that leading up to the elections, there is going to be a rally in the Nifty. That has been proven second time here as far as I can see the data. But post elections, if you look at the data here, you will see markets fell by close to almost 9%, 9.16% here markets fell by. Now this may appear to be very surprising because NDA government has come second time in the power, and instead of markets rallying now, the markets actually fell by close to 9%. What drove this correction in the market after the elections? Let me show you the data. Have a look at my screen and you will see Nifty PE ratio at that time, May 2019, was trading at 29.5. And as I said previously, if Nifty PE is trading at more than 25, markets are considered overvalued. And this was the key reason that markets corrected immediately after elections. Although Buffett indicator at that time, if I look at the data, May 2019 was at around 90% from total market cap divided by GDP perspective, and that is not considered overvalued. But because Nifty PE was mainly at 29, there was a massive profit booking and markets fell by close to 9 to 10%. So when it comes to the current elections that are ongoing, don't just think that if NDA or BJP comes again in the power third time, markets are likely to go up. It is not necessarily the elections outcome that is driving the markets. It's also the fundamentals, mainly the valuations of the market, that drives the market rally or correction. But one thing that is very consistent here is that leading up to the elections, markets have been rallying in the last two elections. Let's now speak about 2024 and what are the scenarios that are likely to play out. Very interesting viewpoint that I will present to you now. So far, if you're liking this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to continue to bring a lot of content to you at zero cost. With that, let's now try to analyze the current situation that is going on right now. If you look at my screen, you will see that from March 2024 up to now, when I'm recording this video, Nifty has been moving sideways. There is no rally that we have seen in 2014 or 2019. So pre-elections, there is no rally here. Nifty has been moving sideways. In fact, in the last couple of days, Nifty has been down. It has come down to below 22,000 level. And the key reason for that is, if we look at what has happened between November and March time period, you will see that there was already a significant rally in the market because of the elections that were held in November, December, state assembly elections that were held. And due to that, if you see, the market at that time had rallied close to 15.49%. So in my view, what I can see is that there was already a market rally because investors believe that BJP is going to come out clearly in this 2024 elections outcome as well. And that is why market had already rallied on the back of the state assembly results. And now Nifty is moving sideways because that has already given a rally of 15%. Now in May 2024, if you look at the PE ratio of Nifty, it is at 21.9, which will suggest that we are not undervalued right now. We are not overvalued right now. We are fairly valued right now from a market perspective. If you look at the Buffett indicator, you will see that right now the Buffett indicator is at around 97%, which suggests that it is fairly valued market. So from both PE perspective and Buffett indicator perspective, it seems that we are into the market zone of fair valuation. So what could happen in the next 4 to 6 weeks when the election results are about to come out? There are 3 scenarios that are likely to play out. Let me give you my view on those 3 scenarios, but what I would like you to do is I would like you to comment on each of the scenarios. What is your view? Because all of us may be right and all of us may be proved wrong. Nobody controls the market, right? So let's go with scenario number 1 first. So scenario number 1 is, let's say BJP led government comes into the power third time. What is likely to happen in that case? My view is that in that case, the market are going to go up slightly. Nifty, in my view, may go up by 5 to 10%, not more than that. 5 to 10% of uplift is potentially possible. Why? Because markets right now are fairly valued. Point number 1. Nifty has not given much return in the last 3 months, so there is likely to be some uplift. And thirdly, why not huge rally? Because market is already baking this outcome. This is what everybody is expecting, more or less, that BJP government is going to come into the power. Therefore, in the scenario 1, in my view, 5 to 10% of Nifty upward movement is possible. I may totally be wrong, but I would love to know what is your viewpoint right now. Let me know in the comments. Type scenario number 1. If BJP wins, then what do you think the market is going to do? Let's move to scenario number 2, which is UPA-led government or UPA-led coalition comes into the majority and there is a major upset to the BJP government. What is likely to happen in that case, in my view, is that market is going to strongly react to that, and there is likely to be a correction of anywhere between 10 to 20%. Because right now, I don't think investors have baked that that particular outcome into the market movements right now. Therefore, in my view, market is going to tank, but this tank is going to be short term. Even in the scenario number 1, 5 to 10% of uplift is only going to be a very short term phenomena of not more than 3 months, because after 3 months then the valuation will drive the Nifty. Q1 earnings will drive the Nifty. What RBI does with the repo rate, that is going to drive the Nifty. So there are a lot of other variables. This is only a very short term phenomena. So in scenario number 2, in my view, there is likely to be a correction between 10 to 20%. So we just need to be really cautious. Scenario number 3 that may play out is that there is no clear majority by either of the parties. And in that case, that is even a worst outcome for us. And in my view, we might see a correction of up to 20% in a very short period of time because of uncertainty in the governance. I would love to know your view on scenario 1, 2 and 3. Let me know in the comments, what do you think is likely to happen if these 3 scenarios play out? Rahul, all this is fine. Tell us, what do we do? Shall we just go and sell all our stock and portfolio and go away? Or shall we start buying more while the dip is going on? So in my view, let's dissect your portfolio into 3 categories. Number 1 is long-term portfolio. So if you're a long-term investor or portion of your portfolio is geared towards the long-term investment, in that case, just stay put, do nothing. Maybe go away and take a break from the market. Don't look at this volatility right now, because if I show the data here, look at this 2014 here. After the 2014 bull run that we had for 1 year, there was a correction again, right? 2019, post-elections, there was a correction in the market, but after a few months, again, the market picked up. So these election events for a long-term investor does not make much difference at all. In fact, if you look at any 5 years horizon, you will notice that markets have always gone up. There is very little chance of losing money if you remain invested for 5 years. Second component of your portfolio might be for the medium term, which is, let's say, between 1 to 3 years of holding time frame. Again, for this portion of your portfolio, elections is not the driving factor, but the valuations are absolutely the key. Right now, the markets are fairly valued, and there will be opportunities in the next 1 to 3 years where markets go overvalued. So there is going to be times where your portfolio is looking very positive, and at that time you should plan to sell. Don't do anything rubbish right now, or don't take any rash decisions right now because of markets falling. This volatility is just part and parcel of the game. Now comes the third portion of your portfolio, which might be geared towards short-term gains, like 3 months duration, 6 months duration, anything less than 1 year, we can call it a short-term bets that we might have taken in our portfolio. What to do with this portfolio? In my view, if you're sitting on profits, good profits, reasonable profits, whatever is your definition of reasonable profits, maybe it is time for you to book the profits. But if you're sitting on losses right now, then re-evaluate your bets. Look at your stocks and see if they are overvalued. If they're overvalued, then you really need to consider exiting those stocks, book your losses and move on. If the stocks are undervalued, then stay put. Market will correct automatically and you will have opportunities to exit them at the right time. Well, this is my current thinking around the portfolio. I would love to know what is your current thinking on your portfolio. Let me know in the comments what you plan to do during this election. I would love to read your comments, and I hope you enjoyed this viewpoint. Do not take this as stock recommendation or portfolio recommendation. I've simply given you my thought process, and I would like you to share your thought process so that I can learn from your thought process. With that, I'll see you in my next video. Until then, keep rocking.